Yeah, yeah. Park to the days in, taking no days in. Yeah. Don't need a vacation, I need a replacement. Turn the lights out as soon as we came in. What they talking about, what is retaining? Yeah, that's in my agent. Asking me if you came in. All of my demons are dating. I fear no hesitating. Everybody in the cadence. They wait, so scared. Just like the ones in the basement. Gotta keep my mixing the water with cheese, making the money get more. Trying to be like King, you better go fit and roll. The 8 O's on this, I'm about to get this smoke. Get it, we smoke. Yeah, we put it out, throw it smoke. At home, down the street, from Alamo.
All right, guys. All right, what is going on? What is Gucci gang, chat? Hopefully you guys are ready to learn something today. Hopefully I have something to teach you. That usually is the case. So, yeah, we'll see. We'll see. We'll see. We'll see. Know what I'm saying? It is a good day. It's hot outside. But other than that, it is a good day. I can tell you. I can tell you. I can tell you. What's good? Slowly, Willow, Felix, Scott, Nick, Tordy, 2020, Mark. I'm a wizard sometimes. Not every time. Sometimes. Man, you guys got some crazy names in here. T, what's good? Capitalist, Julius, Jorks, Manuel, appreciate that. Appreciate that. What's good? Mason, holding longs on NQ. Yeah, you're a dog. You're a dog, bro. Right? More support or resistance ideas around Sunday's gap yet again. Random. Right? Don't you just love supply and demand concepts? Well, it didn't work here. It wasn't support here, John. Nope. It wasn't. We had to go lower. We had to accumulate professionally. Once that low is set, and once we're in a buy model, once we're in a buy program, then the algorithm will utilize concepts to go higher. Oh, but you don't know that. If you believe it's all supply and demand, you won't fucking understand when it's going to work and when it's not supposed to work. Getting into the business early today, Chad, before everybody comes in late. You know what I mean? You know what I mean? Give out all the sauce before people come in. Teach them to get here on time. Oh, John, can you go over that? No, we went over that earlier. Right? Nah, I ain't gonna be like that. I don't want to be like that, chat. I don't want to be a dog, bro. but sometimes they can be. There's equal highs up there. 29,447 down to the low that was set in equities open. Beautiful crossing 50% here. Retracement, discount imbalance there. Rallied up. Previous distribution becomes what? Accumulation, right? Look at all these bodies in here. Okay. Look at all these bodies in here. In here, in here, in here, and in here. Where is price not closing outside of Sunday's gap? Oh, but I thought the level has to be fresh. Nope. No, no. No, 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 no. That is a lie. That is a common misconception. Support or resistance, fresh levels. No. That's not how that works. It's hidden, if you will. That's why a lot of people can't see it. They don't know what to look for. Consolidation. Left it, back into it, left it again. Bearish until manipulation. We don't really get manipulation here, right? That's a low. And that's a higher low. Okay. What about ES? That's a low. And that's a lower low. They don't both have to sweep lows. And if anything, you don't want them to. You want one of them to not do something. So ES does, right? Take that low. Uh-oh, more supply and demand for you. More supply and demand for you. Sunday's gap being respected. So we'll start to see if the supply and demand schools will start including gaps in their repertoire. Maybe, maybe not. ES is the one that had manipulation. So if NQ doesn't do that, NQ is under professional accumulation. I went over that yesterday. Shout out to Larry Williams. Right? Down candles here being supported. So this is our market maker buy model on the day. Equal highs as a target. And that has already panned out. Right? So how do we know that it's not supply and demand? How do we know that it's algorithmic? Because once we get a buy program, when we are in a buy program, shit, one of those got to be green. When we are in a buy program, okay, discount concepts will not trade to the lower end. S&D never taught you that. I did. Down candles will be respected. We see that here. When we get into a premium for the first time, we usually go back into a discount. That's why that works. Okay. When we get further into a premium, it will still seek some sort of discount pricing. Again, we have a level of distribution here, right? This up move here to go lower that was traded through. So this level of distribution becomes accumulation. That's why we trade inside Sunday's gap, but we trade to the extent of the high end of this level of distribution. Interesting. Imbalance here as well. Right? Where do we not trade to? We do get to the lower end. Don't get me wrong. We do trade to the lower end, but we leave a little sliver open. Y'all ever had a prosciutto, a little bit of gabagool, and they're very thin sliced, very thin, unlike your mom? There's a little thin sliver right there, baby. Bang. That the market here does not reach for. Bullish. Bodies can't even close inside of it. Bullish. Bodies respecting Sunday's gap. That's how you know we're in a buy program. The algorithm is referencing this. It's referencing that. It's definitely referencing Sunday's gap. And it's going, okay, where am I going to reprice to? Equal highs up here and London's high. Beautiful. Immediately, right? Did all the buyers come in? Did all the buyers come in at 11 o'clock? No. That's not how that works. The algorithm is repricing it higher. Okay? You see how consecutive those candles are? Little bit of stagnation here, right? No big deal. Down candles being supported, right? Oh, more fucking supply and demand shit. Look at that. Look at the bodies respecting that series of down candles. Not supply and demand. Immediately higher. And then it does spend a little bit of time here. Finally reaches into that. Still can't go, you know, lower. Most people are probably still bearish on social media. And then bang, we actually do send a little bit more for that liquidity. Here's 1150. 1150 is right there. Bang. 1210 was 5 minutes ago. Right? Look at that. Oh, macros don't exist. Okay. Sure they don't. Let's go to 850. 850 is right there. 910 is right there. That might have been ass. This was definitely some ass here. But that down candle here, price can't get through that. Right? Ain't that weird? Isn't that strange? It's very odd behavior. Right? It's very odd behavior, isn't it, chat? That down candle at the start of the macro, we can't trade and close. Well, we can trade down in there, but price does not close in the lower half, right? Oh, that's fucking weird, isn't it? And then those down candles right there, propulsion. Weird. Weird and strange behavior. We trade outside of it, dip into it here and here. Can't close in the lower half. Weird. Weird, isn't it? Isn't this stuff just so strange and odd? You ever just quantify price this way, dude? You ever just like look at price and like really get into the details? 950 to 1010. Okay, what are we doing here? A little bit below the macro opening price. Trades into this. Well, we're still inside of that series of down candles here, but we trade outside of it during that macro. And I really don't feel like drawing out the rest of this. So we'll go ahead and slap that indicator on here. Okay, look at this. Look how beautiful this is. 1050 begins. Trades down into Sunday's gap to go higher. That just has algorithmic signatures all over it. All over it. Macro referenced it here. And it referenced it here. And then it referenced further liquidity here. So we did not set the low of the day inside the macro. Right? But if we look carefully, if we look closely, if we look with some, you know, level of precision here, let me tell you something, okay? Let me tell you something. That's all I do here is tell you shit. There was an individual who asked me, there was actually like 3 or 4 different people that asked me, they said, John, what is a CISD? They said, what is that? On my Instagram. It is a change in the state of delivery. Okay? Or if you want to use S, shift in the state of delivery. It doesn't matter. Change, shift, same shit. Okay? Now watch this. There was a video that I did a long time ago, and it's called 2 Ways to Find a CISD. I actually sent that video to the last person that asked me that. Right? 8-minute video, 10-minute video. And I gave them 2 different, in that video, I gave you 2 different ways to measure a change in state of delivery. One of them is the series of down candles. Sure. Now, what do you do when that range is that large? I don't do anything with it. That's too much range. I can't, you know, swap to a different time frame or something. That's too much. That's too much. But the other way that I told you was the imbalance, right? That's the last imbalance on the way down. See that? Immediately traded through. That's a change in state delivery. Now, we actually do trade outside of it here. I'm not going to argue that. But look at that. Change in state delivery, retracement, higher. And then look at that. Isn't that weird? Isn't that weird, dude? I'm just now seeing this for the first time, just like you are. You probably weren't on a 1 minute today. Probably weren't in, down, and dirty in the details. But look at that. Algorithmic signatures all over it. All over this market. There is algorithmic signatures. You're telling me, right, that the bodies closing there and opening there just so happen to be random? This shit's not fucking random, dude. This is not random. Look how crispy that is, dude. Like KFC can't even get this crispy. Shit is a joke, man. You're welcome, Jay-Z. I appreciate it. And yes, Roberto, yes. So anyway, we do make our low of day here prior to 850. But we get our shift in the state of delivery right before that. So our macro took us higher. And then a reversal. Or, sorry, a retracement. Right? Can't get through that inversion here. Bang. So that set the low of day. So the low of day was not set at a macro time. But during the macro, price was not allowed to trade lower. Because the algorithm would not allow price to go lower. Okay? And again, how do I know this? And I'm not going to do this every stream. Okay? There are people out there that believe in supply and demand. But again, just ask yourself this. If you were watching this in real time, okay? Or even if you have that data to like replay the charts with like being able to see volume or like the book maps and all that shit. There are orders here and at that wick low and at that low and all that stuff. There's pending orders all in here. All in there. There's pending orders. There's so many traders and there's so many price levels to, you know, to trade and to put your stop loss at, or to put a buy stop, sell stop, or buy limit, sell limit, OCOs and all this shit. And price is saying, no, I'm not going down here. I'm not going to this low. I'm not going to those bodies. I might trade outside this a little bit, but my bodies are respecting certain things. And that's the part, again, that I don't get. If the market, right, is based on supply and demand, and there are buy orders here, why does the market not reach for those orders? Or, and I've seen this before, price will hit your buy limit, but yet price will go away from it and not fill you. So how does that work? How does price actually go to your order, but you don't get filled and then it goes away? I've only seen that happen a few times. I market order pretty much permanently at this point. But I've seen that in the past where it'll hit my limit, not fill it, and then run. Thank you, Manuel. Jordan's good with volume. I'm not. I don't know. I just, again, I can't trust it. I just can't trust it. But anyway, like, bro, if you guys seriously looked at time and price, if you seriously looked at this stuff, you would, I mean, look at this. This is that 5-minute imbalance, right? Look how price dips into it, runs. Dips into it, runs. It's dipping its toes, like I said yesterday, like it's testing the temperature of the water before jumping in. And price is running away, it's screaming away from it. This is what a buy program looks like. what was once, this was actually never bearish, but it is the last imbalance on the way lower. It immediately gets traded through. Then, right, price is respecting that at a time where we expect it. 8:50 to 10:10. That's a 9 o'clock macro. They don't think an algorithm exists. They don't think macros exist. They don't think any of this stuff exists. They don't believe in any of it. That's why they don't really get precision either. But anyway, I'll try and be less of an asshole. You have to study this stuff. That series of down candles here becomes the propulsion. My propulsion model. It's not my model, but it is a model, right? The propulsion model. We went over this before. The down candles that get created off of previous down candles, that becomes the propulsion models here, right? And then that 5-minute imbalance being respected, we trade outside of Sunday's gap. On a 1 minute, we do trade outside of it. On a 1 minute, yes, we do. On a 5-minute, however, which is only like 1 or 2 time frames higher, now you see why it had did that, because it was trading into that imbalance and trading into that level of previous distribution. Oh, and watch this shit too. Oh, heavens, dude. You see this imbalance right here? You see that? We have a gap right there. So we have to include that gap. That's always been the rule, right? Watch this. Bang. What's it reaching for? Wow. Wait a second. Do you know the 48 laws of trading? Do you know them? Hell, I'm the one who created them, and I can't even tell you all of them off the top of my head. That's why you're ready to sit down, folks. But one of the laws is Law 12. Let's go over to Law 12 real quick. You guys know what Law 12 is? It's out there. It's free. Does somebody want to put what Law 12 is in the chat? Number 12. What's Law 12? It's not Theory 12. It ain't Theory 12. It's Law 12. What is it? The whole law, Roberto. The whole law. Who knows it? This should be purple. Jorgs, thank you. Law number 12. Confluence is key. The law of confluence. Okay. What is the first note that I have in there? What's that first line in here? Can y'all see that? What's that first line? Overlapping concepts are high probability. Trading overlapping concepts in the direction of the higher time frame is high probability. That's what an overlap is. That's what an overlap is right here. See this little space right here? The 5-minute imbalance is measured with the parameters of that green box. This also 5-minute imbalance is measured by the imbalance, of course, but with the gap included. So there is a space in which they overlap, just like a y'all ever seen a Venn diagram? I think it's a Venn diagram. It's the 2 circles. Y'all have seen that before? Y'all ever seen some shit like this? This is one group, this is another group, and this is where they overlap in the middle. You remember? I'm sure chemistry or fucking math probably has that shit. So what I'm telling you is there is a space right here in which they both have overlappage. Whatever the word is, chat. I'm a seller, not a speller, maybe. I don't know English. You see that? That little space right there is where they overlap. That's Law 12. That is my Law 12. And that is a law in price action, right? Think about that. 48 Laws of Trading I put out, what, 2 years ago? I don't know how long it's been. It's been a long time. And these laws are still true today, just as true as they were when I created it. Just as true prior to my discovery of it. Because this is how markets operate. This is how the shit works. Bullish concepts with previous bearish concepts. That's disgusting. That's disgusting. Signatures of a buy program at the low. Professional accumulation. That sets the low. Low risk buy right after that. Whether that be right at 850 or that retracement later inside that macro. The same macro that doesn't exist, apparently. Then we cross 50%. This becomes the first leg, right? Because we barely get into a discount. Manipulation, or sorry, it's not the manipulation, but it sets the low. So that would be the manipulation low. So the low is set, low risk buy, first leg, and then this discount is our second leg of accumulation to go for those highs. Cake. Everything in here is a signature of a buy program. Think about it. It goes in order, okay? And again, people didn't teach me this shit. I eventually figured it out. Eventually. Not right away, but eventually. Okay? It's in order every single time. And if I have to write it out for you, I will do it. Okay? Watch this. My fucking microphone's in the way. The low set. Okay? Now that's going to be either the divergence or manipulation. What's after that? Low risk buy. What's after that? First leg. What's after that? Second leg. Just put leg. Okay? Every time. Every single time. Oh, shit. Sorry. There's so many markups on here, dude. I got so much going on. Just put it way up here. Can y'all see that? Can y'all see that up here? It's good enough. Good enough. Low set either with the divergence or manipulation. Either one. Then the low risk buy, then the first leg, then the second leg. Every single time. It does not go out of order. It never does. It can't be second leg and then low risk buy. Nope. Doesn't operate that way. You have to have a low, then the low risk buy, then the first leg, then the second leg. It will never not be this. Do you understand? Do you, bro, y'all don't even get it. The level of confidence that you will gain, if you don't have it already, by understanding and knowing that this is how it works, you will never be lost again. You'll never be lost. Now, if you don't have a high probability bias or high probability target, yeah, you're going to be lost until something forms. Something's got to form. Okay? And that's where the patience comes in. You got to wait for something to form. Okay? Original consolidation. We leave it, back into it, leave it again. So bearish until either manipulation or the low is set. And then everything I just told you, that's our low, low risk buy, first leg, and then this discount starts the second leg. So anything in here is all part of the second leg. That could be a buy, that could be a buy, that could be a buy. I wouldn't buy this, but everything in there is a buy. Everything, and I do mean everything. Every fucking thing, okay? Write it down. Not the F words, but everything. Once that low is set, everything right after that is high probability to go higher. The low risk buy, the next candle entry, the late entry, the lazy traders model, that 25% level, easy. That 5-minute imbalance, easy. That inversion or the 5-minute imbalance or Sunday gap low, all of that, all of it is high probability. You may not have a super tight stop loss, but it's high probability that we're going higher because everything in here, okay, from the low up to the high, well, technically the run on liquidity is here. We meet the high at 11:35, but the run on liquidity is inside the time windows that people don't believe is there. All of that, okay, this entire space here, and let's clean this up. This entire space here, okay, from that to terminus and beyond, the run, everything in here, okay, is a buy program, okay? It is a buy. That's not what I meant to do. There we go. That is what a buy program looks like. You want to lose? Short a buy program. You'll get wrecked. All right. It's not. I can't even think of a list of what it isn't, or, you know, what it can't be. It's not buyers coming in. It's not buyers driving price higher. That's not how this shit works. Again, my opinion. It's not how it works. The algorithm is repricing higher. So all of the retracements are opportunities to either long or add on. Do you remember I taught you how to Christmas tree? I told you can't do it yet, but I told you, right? You can buy new high here. That's an exit. 5-minute imbalance. That's a buy. New high. That's an exit. 5-minute imbalance. That's a buy. New high. That's an exit. Retracement. I think that's Sunday's gap. So in hindsight, sure. That's a buy. New high. That's an exit. And then the run. So you see how all of those in here would be a Christmas tree? Do you see it? None of your mentors, none, not a fucking one, except me, has taught you how to do that. I know I pride myself on that. I'm kind of a dickhead today. I've had a lot of caffeine. All right. Self-control is hard when your heart is fixing to explode. All right. It's hard. It's difficult. We might not even have one. Do we have that emoji on here? Does anybody know? Oh, there it is. There it is. We can't rotate this, can we? Oh. Look at that. Every concept has an inversion. Every emoji has an inversion too. Look at that. You see how that works? Who needs a C8 logo when you got a Christmas tree? Look at that. Buy the star. Buy the ornament. Sell the ornament. Buy the other ornament. Sell the other ornament. Look at that. Who has ever showed you this stuff? Who has ever showed you this stuff? Nah, the one and only, baby. The one and only. That's how crazy this stuff can get. Y'all think it's a joke, but I'm telling you, this is how markets work. Remember when I initially explained it to you the first time? I said this is what high frequency trading algorithms do. That's what they do. I don't really care to trade that way. I'd rather take the low risk buy or one of these retracements in here and hold it for terminus because I want like a bigger move. I don't want a little rinky dink like, okay, 5-10 points here, whatever. Plus, trying to manually do that, you're going to be there all day taking a lot of trades. I'd rather just snipe, hold, and be done. And it is difficult, right? But I think you guys are kind of understanding my point here. There are, we'll just I mean, test this theory, guys. Like, you gotta understand, if that's terminus, right, and the market went lower, there will be buy stops at the at that high. There will be buy stops at that high. There will be buy stops at that high. There will be buy stops at that high. Right? 1, 2. I'd say this high right here as well. 3, 4, 5, 6. So there are 6 different opportunities to partial. Now, if you think about that for a second, right? Just pretend for a minute. Ooh, excuse me. That is an opportunity to partial. Do red. That's an opportunity to partial. That's an opportunity to partial. That's an opportunity to partial. That high. That's an opportunity. That high. That's an opportunity. And then terminus, which is technically here. And then the run. But fine, we'll just use those, right? You see the little ornaments I'm talking about now? Now mark up the other side. Mark up the buys. Okay? Oh, shit. I meant to move it. Okay, that was your accumulation. Professional accumulation. So that technically should be the star. Right? Next candle entry, low risk buy, those can be longs. 5-minute imbalance, that can be a long. 5-minute imbalance, that can be a long. These down candles you might have mistaken for a propulsion, but that's Sunday's gap. We can allow that as a buy. Doesn't have to be right at the low, and you're usually not going to get the lowest low anyway. Try to get close to it though. And then that series of down candles here. Do you guys, like, fuck, man, can you visually see it now? Like, I've tried to explain it. You know what I'm saying? I don't think I'm the greatest at explaining everything, but I'm doing my best here with the tools that I have on TradingView, okay? With the drawing tools and the emojis. And it's not to be funny per se. It is the best visual depiction that I can possibly come up with to explain with words and visuals to give you guys the understanding that I have on how the algorithm delivers price and how high frequency trading fucking works. This is hard to explain. It's sure as shit hard to understand. But when you actually sit down in front of the charts, when you sit down and you focus, you eliminate distractions and you go, okay, what is he talking about? Let's take a look at it. You have to see where the liquidity is at and where the buying opportunities are at. And it's not going to be every single turning point in the market, but these major turning points all have something in common. Liquidity, retracement, liquidity. We do extend further, no big deal. It's not just going to retrace right after it traded into a pool of liquidity. Okay? It's going to run, you know, that pool of liquidity. Then it'll seek a retracement. New pool, retracement. New pool here, higher one there. No retracement, because now we're in the second leg of accumulation. Now it's going to reach for London's highs, and it's going to do it in a hurry. It's going to do it like a magnet because it's coded to do that, not fiddle fart around like this. There's a reason it does that, but it's not going to fiddle fart around when it's near the high. You have seen this stuff over and over and over and over again with my charts, with my tweets beforehand, with my trades, with my trade recordings. You've seen all this stuff. Yeah, Willow, I know. Thank you, Roger. Yeah, every day. Price action sucks every day, according to social media. Thank you, Kesha. I'm putting my friend on your stuff. Shout out to a new member. His name is Mateo. Oh, nice. Welcome, Mateo. The thing is if you're wrong, you build up a wrong position, right? Which is why you never go above full risk, which is either 1 or 2% for most beginner to intermediate term. I'd even say like expert traders too. I personally don't go above 2% unless I do it by accident. I make mistakes too. You know, it might be 2.1 or 2.5, you know, if I make a mistake on the math. But you don't add to a position by adding risk. You add to a position by either being break even on everything or having the loss on the add-on be 1%. So, and right, slowly, that's the point. Think about all the shorting opportunities, right? So, not that I would do that, but are we green or red? We got to go back to red for a minute. Okay. Like that sweep to go lower was a short. That imbalance was a short. This imbalance here was a short. That imbalance here was a short. I'm not going to say this was a short. And obviously that imbalance here was a short in hindsight. All of those turning points, right, were for shorts. I'm not going to call this a buy in here. That's not a buy. I wouldn't teach you how to do that anyway. That's ass. You're buying in the middle of a selling program. Yeah, you're going to get wrecked or break even at best. Not good. You're offside. You're salmon. Okay. Should we bring back the salmon analogy? But this is how I would study if I were you. Okay. And you will better understand why when I tell you like, oh, I'm looking at these highs or internal range highs here or up here or whatever, because this is what I'm seeing. Now, mind you, I'm looking at a chart like this because I'm trying to see what looks obvious. That high is obvious. This one, not so much, but that one is. And then those equal highs as London's high. That's ideal right there. So every new high is an opportunity to partial. But if you don't, you're going to have to wait for the pullback and then hold for terminus. So, but hopefully if you actually go into the charts and mark this stuff up, mark up the buys, mark up the new highs as partials, and you will in fact see a Christmas tree just like this, which is why I've called it that for a long time. Even in the old days when people would post their charts and they traded 20, 30 times a day, I'm like, shit, Christmas in January, bro. What are you doing? Christmas in March. What are you doing? There is a certain way to do that. I usually don't do it. I'd rather get one or two, hold for terminus, and that's it. That's how I like to do things. You might be able to do it. You might like doing it. Yeah, John, I can get the low risk buy, and then when I'm in here, I'm lost. I don't know if this retracement is going to come down to sweep that low, or, you know, I'm really going to shit my pants if it comes all the way back down to my entry. Why is it going to do that? Why would it do that? Why would it do that? We're already in a premium, and we're at Sunday's gap too. It could sweep that low, sure, but it ain't going to come all the way back down here. You silly goose. It ain't going to do that. So you might like buying the first couple opportunities and then adding on a little bit later. I'm not scared to add on right there. I'm not scared to add on to that right before the final move. That's just a little bit of icing on the cake. I like icing on my cake. I don't know about y'all. I like having chocolate chips in my cookies. The fuck I want a plain cookie for? Throw some chocolate chips on it. What are we doing? What are we doing? You got a little scoop of ice cream and you got some sprinkles. Throw some fucking sprinkles on it. What are you doing? We're already having dessert. We might as well make it look good. You might as well just add on right at the very end for a little bit of a boost. Why wouldn't you? I'm telling you, chat, I am telling you guys, you have no idea. I keep telling you, this trading stuff gets deep, very deep. The knowledge, I'm not going to say the knowledge that I have, but what is available to you is insane. And most still don't know this stuff because most are still looking at indicators and trying to figure out the right settings, and they're so focused on psychology. You can't out-psych a short in a bull market. You could be Mark Douglas himself, bro. But if you're shorting on the way up, you're going to fucking lose. Okay, you don't want to be bothered by that. That's fine. But what's the difference? If two traders, one of them shorted in a bull market, right? If they both shorted in the bull market, one of them took a loss, didn't feel anything. The other took a loss and feels like a dickhead. Why would it be any better to not feel anything? You both fucking lost. You both still took a losing trade. Your accounts are both lower after that trade is closed than where they started. You're both offside. It is much better to be onside than it is to be offside. I'd rather be onside and nervous. I'd rather be onside and anxious than to not feel anything or to feel happy by getting stopped out. That's stupid to me. Why would you want to do that? You cannot out-psych a bad strategy. You cannot out-psych shorting a bull market. It doesn't work. Doesn't work. So, anyways, what questions do you guys have? I feel sorry. I know I kind of went on a little bit of a rant today, but again, I'm doing my best to try and give you the information here, okay? And this stuff really works, dude. It really does. In chart colors, I forgot what I was saying when you said that. How's life? Awesome. I have no complaints. I think I gained like 2 or 3 pounds recently. That's kind of trash, but it's on me. You know, it's on me. It's not on the restaurant. Should be. What do you know or how to use about standard deviations? I don't use standard deviations. You can throw, again, this isn't really like what I care for. Whenever you have a mitigation, okay, you can use the length of that mitigation and the extension that is above the highs, like it would be that can be a good target. So that's really more of an extension, not a deviation. The way that I understand deviations is you would take Asia's range, whatever it is. You might be able to do London. I don't technically know. Because again, like I don't care about this shit. But you asked, so shit. I gotta tell you something. Like if that is the range, right? Whatever number of points that is. So a standard deviation would be to take that range and project it lower. So that would be 1 standard deviation. This would be 2 standard. I mean, it's going to be off a little bit, but I think you get it. So like that would be 1 standard deviation. That would be 2 standard deviations. And then so on and so forth. You'd have like a 3, and then like this would be like a 3.5 or something. So you could use standard deviations that way. Me personally, again, I don't use it. I do not use it. I don't care. Less energy drinks? You're going to get banned. You're going to get banned. Water with lemon? Am I fucking gay, dude? Water with lemon. Sounds like something a lady boy would drink. Couldn't be me. Couldn't be me. On a side note, I want to clarify. The other day you were talking about put options. I thought you could lose unlimited amounts of money. Turns out it's predefined risk. Right. Of course. You think I would teach you something that you would lose unlimited money on, bro? Tripping. Tripping, capitalist. Absolutely ridiculous. Standard deviations are similar to average daily range. No. ADR, I think, average daily range. ADR is the last, it's either 3, I think it's 5. Average daily range is whatever the previous 5 days average is, which that's why I don't use that either. I think that's stupid. Me personally, I do not get precision when using standard deviations. I don't get precision with using average daily range. That's why I never taught you that shit, because I don't use it. So if I don't use it, if I'm not good at it, why would I show it to you? So I don't. What do you prefer trading? The pair that sets the low by manipulation, or the one that is under accumulation, or does it depend on which one has cleaner price? Cleanliness doesn't matter because that's subjective. Usually I prefer the one that is under manipulation because I like trading after manipulation. Now, in an ideal market, in an ideal environment, if you really want like what's most optimal, you would trade the one that's under accumulation. Like, so in today's case, in today's case, where we had NQ, right? Where NQ made this higher low here. When we look at ES, and ES made that lower low, what I like to do is I would trust ES. Shift and stay delivery. We don't have the same highs up here, but shift and stay delivery, bang, right there. Like that's a good buy, or a little bit after that. Like 9 o'clock. I might wait until 9 o'clock. Just buying at the hourly open or a little bit after the hour opens. Right? Plus, it's like right around 50% of Sunday's gap too, which is fine. I like that because I trust that this is manipulation. However, the ideal long would be better for NQ. Okay? And you can even see in the numbers as well. S&P is up 0.58% and NQ is up a whole 1%. So you can even see that in the numbers as well. So ideally, it would be NQ. What am I more comfortable with? Probably ES because of the manipulation. They're both still going to go higher. They're both still going to go higher. It's just NQ is stronger, so that's why it's more ideal. But I mean, if you pull the two charts up, right? If you see something like this, and you see something like this, brother, as long as you bought either one of them, you're winning. So at that point, it just comes down to, do you want to optimize or do you want to do something that you're comfortable with that works? There's comfortability and then there's optimization. Sometimes it might be both for you. Sometimes you're more comfortable with the one that's under accumulation and that's also optimal. So that might be you. Hey, if that's you, then go for it. It's just with me, I study liquidity and I've studied liquidity sweeps for so fucking long at this point. It's just what I have learned to trust. I'm just more comfortable with doing that. You know what I mean? So hopefully that helps. But that is going to be it, dude. That is going to be it. So Hopefully you guys learned something today. Drop a 1 in the chat if you guys learned something at all today. Or if you had fun, drop a 1. I mean, I gave you guys something to back test. You know, I explained why I believe it's algorithmic and why it's absolutely not supply and demand, my opinion, personally. But I'm giving you evidence based on what I've already taught and based on what the markets are showing you. Like, I cannot fathom how anybody on this planet can sit at a chart and look at all the details, every single candle, every single time window, every single pool of liquidity, every single buying opportunity, every partial opportunity, the 50% premium discount, inversions, fucking all this shit, all 48 laws. How can you sit there and look at that and really, in your heart of hearts, in your soul, how on earth could you believe that it's supply and demand? I don't get that. I can't. I cannot bring myself to understand that. You know what I mean? There's a lot of things that I don't get about people. You know? There's an analogy that I have, and I don't want to say it because I want to be professional, but you know, there are adults who are attracted to kids. You know what I mean? Again, that is something I cannot comprehend in my mind. Like, I cannot understand that at all. You know what I mean? There's just things I don't understand. You know? How does the Earth fit in with the galaxy and all this gravity and sun and all this shit? I don't get it. I don't understand it. Okay? I just don't. There are things I don't understand. And those 3 things are one of them. I don't understand how you can see that, all of this stuff in immaculate detail on multiple time frames and come to the conclusion that this is a random market. It makes no sense. You know? So. Yeah, I don't know, Mason. They're going to get me one day. They're going to get me one day. They're not going to let me get away with this forever. I'll get a knock on my door eventually. But it ain't today. All right. Y'all be good. Be blessed, man. We'll be here. Oh, it's Wednesday. So all the freebies, I'll see you guys again on the 18th. That's Monday of next week. For the members here, I'll put out a market review tomorrow on Thursday. And then we'll have our member-only live stream on Friday the 15th. So don't forget to go read something. Book of the month for this month and next month is 48 Laws of Power by Robert Greene. Incredible book. All right. And it's a long one, so that's why we're spending 2 months on it. And it's pretty good. Today's the 13th, which means we are on Law 13. When asking for help, appeal to people's self-interest, never their mercy or gratitude. Some shady shit in here, but it's worth learning. Felix, that depends. Ask me in the Discord and I'll get to you. Y'all be good. See you when I see ya.
yeah.